So in today's video, I'm going to be doing a full overview of trade payables. Now this is basically intro video, so I'll just make this topic come to life. So if there's any misunderstandings about this topic, you can just clarify. So firstly, what is trade payables? Now in high school, we consider trade payables to be creditors control. So creditors control or trade payables is basically people who you owe money. They are basically people who owe you money are creditors, right? I mean, people who owe you money are debtors. But if you owe money to them, then you are a creditor. Now, why are creditors or the trade payables exist? So let's say you're a person and you want to buy something, but you do not have any money. Now, instead of not buying that thing, the business, so let's say this is the business, will say, okay, you can buy this product for, let's say, 100 Rand. But you have to pay maybe 30 days later. So you can get this product, right? There is no charge when you buy it. So the charge will be 0 Rand. But after, let's say, 1 month, you have to pay the 100 Rand back. Now, this only happens when people are actually good. But most people do not stop here. They charge interest. So they'll say, okay, I gave you the favor. I'll lend you the 100 Rand. Give me maybe 10% interest. So 1 month later, you'll pay that 100 Rand plus 10% interest. So that'll be 110 Rand. So the total cost of that good was 110 Rand. And that's how it works in the real world, okay? Credits. So now you have to understand. Now we know the person's point of view is simple, right? He got that 100 Rand, gave it, paid interest, whatever. But a business point of view, it's more complicated, right? Because you as a business have to make sure that, listen here, I got this and so creditors. I mean, for a business, this person is a debtor, right? So if they owe you money, at the end of the day, if all people just buy on credit, then that's bad, right? Because at the end of the day, what if they don't all pay the money? Because let's say you have 1,000 products and it's 10 Rand each, right? So let's say every customer of yours was people who bought on credit. So that 10,000 Rand is in credit. You don't have that cash. And this is where it gets a little bit tricky for businesses, right? If you don't have that cash with you, although they bought all the 10,000 goods and you're supposed to get 10,000 Rand, what if no one pays? So you lose the 10,000. So businesses have something called creditors list, okay? Where basically an individual's account, for example, let's say a creditor's name is A. The creditors list will tell how much that creditor has, and maybe creditor B, how much they owe. So this is very, very good, because at the end of the day, maybe A is a good creditor, eh? A good debtor. He will pay all his money. So that list will tell you exactly how he pays, when he pays. And then B might be a debtor who just doesn't pay at all, right? So you can basically, deal with him accordingly. Now, for a business point of view, how are the transactions recorded? Now, if you look in this page, which I'm going to show you, another important fact to remember is this, right? A person does not have to be a creditor, right, who owes money to a business. Now, in accounting, now we mostly deal with businesses to businesses. So a business can be a creditor. Let's say you're a business that manufactures drinks, for example, and you don't want to pay your suppliers straight away, right? You want to purchase your supplies on credit. Now you're a creditor, right? So we mostly deal with businesses as creditors here in accounting. So let's say you bought something on credit from a supplier. Now when I mean buy on credit, you never pay now for it, you'll pay later on, right? So let's say you bought something for 100 Rand. Okay, let's say you bought inventory for 100 Rand, right? This is your supplies, your stock. So if you bought inventory for 100 Rand, you'll first record it in a journal. Okay, you know how it works, the accounting process. It goes to a journal first, then goes to a ledger. So a ledger is like this, right? But first it has to go through a journal, always. So when it goes to the journal, basically this is how a purchaser's journal looks. Now, purchaser's journal is all the purchases you make on credit, right? So if you make, let's say, a purchase on credit, you bought supplies for 100 Rand. You'll put the day. Now, the document sometimes not needed, right? The details, you must write down the name of the supplier. And then you have to, in this column, put the total amount here, always. Okay, so let's say if I bought for 100 Rand on credit, I put my 100 Rand. Now, what are these accounts over here? Purchases and sundry. Basically, it's telling me, okay, I know I have to put 100 Rand here of trade payables, but what's it for? So all this 1 column here, 2 column, 3 column, are basically saying, okay, what's this number here for? What's this payment for in trade payables? So in this case, my 100 Rand which I bought was inventory, right? So it will go under purchases. Now, why they have it purchases over here and not inventory? It's because they said that this is a periodic inventory system. If I'm not mistaken, yeah. They say it above, right? Periodic inventory system. Now, periodic inventory system, whenever you basically refer to inventory, you say purchases, right? So purchases and inventory is same thing. Just that be careful. When they use a periodic inventory system, it is purchases. If they use a perpetual, it's inventory. Okay, so now let's say I bought 100 Rand worth of equipment on credit, right? Obviously over here the day will be something, the details will be the supplier, my trade payables will be 100 Rand, but then I will put my 100 Rand in sundry. Now what is sundry? Sundry is basically the things which are not in here. Now in here is only purchases. So if it's not purchases, now there's nothing else to put, there's no account for equipment. So sundry basically says, okay, make an account. So I can put like, okay, let's say like here, I can put my 100 Rand and I can put equipment. So always when you're putting the amount in the purchases journal, you put the amount of credit over here always, no matter what. But then all this rest of the column says, okay, what is that amount for? Is it for purchases that you did? Okay, then put it here. But then if it's not for purchases, then obviously there's no other account. So make your own account, and therefore you put it over here. Now, why do they got CPJ also? Remember, you can buy on credit or you can buy for cash. I can go by my supplier and say, okay, I need to buy 100 Rand worth of stock on credit or 100 Rand worth of stock on cash. So for that, always I'm in CPJ. Okay, you use the CPJ when you're buying on cash. Okay, so if I want to buy, let's say 100 Rand worth of stock on cash, I will go to here. Now, as you can see, it follows the same exact format as a payments journal. The only, now bank over here, you always put the amount straight to bank, always, okay? And then obviously, as I told you, that amount, what's it for? So all the column after it, what's it for? Is it for inventory that you bought, purchases that you bought? Now trade payables. Okay, now the reason why they got trade payables here is, remember, CPJ, you're paying people money. So let's say you're paying your debt. So you owe your supplier 100 Rand. Now you are paying that 100 Rand. Okay, you are paying that 100 Rand. You're paying the amount you're owing. So that is why when you pay that amount, if for example there's 1,960, you put in trade payable. What's that amount for? It's for your trade payables. It's for my supplier, my credit supplier. So that is the reason why they have trade payables over here. And obviously, if they do not have, so let's say you bought rent, you paid for rent, there's no rent over here, so you make your own account rent. Purchases returns journal is the opposite of the purchasing journal. So let's say you bought stock from the suppliers for 100 Rand, do not like the product, you return it, then you go to something called the purchases journal, right? So in here we'll have purchases returns, so it'll always be like what the amount is here, and then your trade payables, right? Purchases return is inventory, yeah, and that inventory is a trade payable. Then here now, okay, so from there we'll post to the ledger. Now to post on the ledger, I want you to look at these amounts and where they got it from. If you really think about it, the purchases journal over here. Let's say trade payables. We know trade payables, this is somehow going to go into the account of trade payables. So how do you record this transaction? Think about it, you purchased on credit. So your trade payables will increase. And where does trade payables increase? Because it's a liability on the credit side. So on the credit side, it should be 35,421. So let's see. 35,421 on the credit side. That's perfect. And then you can put sundry purchases as a contract, because basically it's saying like, okay, your trade payables, like what you bought on credit. You bought your inventory purchases, whatever you can say. But basically how this works is you can do it one time. You see this purchase and trade payables, they're like contra accounts. So it's actually debit purchases and credit trade payables. That is why over here you put, well, we do not have a purchases ledger, but we'll put like debit trade payables under the purchases. The trade payables will be the contra on the purchases ledger, and then credit trade payables, the trade payables will be purchases as a contra. Yeah. And yeah, so basically that is it. And then over here, cash payments journal. Remember, you deal with bank over here. Now, if you're paying your trade payables, it's going to get reduced, right? So you debit trade payables with the amount 25, 22, 5886, and here, as you could see, it's over here. Returns, same thing. Returns, if you're returning goods, it's decreasing. So that is why it goes under year 300. And then obviously you worked on your balance brought down, balance brought forward. But basically, you see all this trade payables account, all those trade payables account, the final finger will go into here. Now what's your trade payables subsidy ledger? So if you look at your trade payables account, I know I got, a lot of people I owe money to, okay? If I look at my creditors, right, people who I owe money to, there's a lot of people, but I want to know from my trade payables amount, I want to split them all up. Basically, the individual account. So instead of saying, I owe 1,000 Rand to basically my suppliers, you can say, okay, I got supplier A who I owe 800, and then I got supplier B I owe 200. So you're basically taking all the suppliers from the trade payables who you owe money to, and basically putting them individually in accounts. So you can see exactly who you owe money to, how much you owe, etc. Right? So it works out the same way. So the account over here is a liability. Whenever you purchase from them, you owe them money. That is where all these are purchases that you owe. And yeah, now your creditors list comes from all this, right? So you look at the balance brought down 7820. It should be here. 7820. So basically these are the final amounts that you owe them. Okay, you owe them. That is why it's a list of balances, right? Now if you total this, you should get to the trade payables amount. So 33,126. And if you go there we go, 33,126. So basically the subsidy ledger, the list, takes the trade payables, splits it up into the actual people who you owe. Okay, like this over here. And yeah, they basically it's the same as the trade payables amount. So this is how trade payables work in real life businesses, ledgers. Now, are we going to need to draw these ledgers? I don't know, but I'm just giving you more information on it. Remember how I told you how this trade payables work? Okay. Yeah, so that's how transaction are recorded with deals with trade payables.